Everyone, this is Joe Gentili from Left Tail Risk Advisors. So I'm going to make a series of videos about a lot of the best uses for life insurance and the situations where it could be very helpful in somebody's life. But before we get there, I want to start with a short series describing the different types of life insurances that are available for people to buy. So we're going to do a short series on that, starting with term life insurance, and then we're going to also go into the permanent life insurances, whole life insurance, universal life insurance and its variations, and variable life insurance and its variations. So first, we're going to focus on term. This is the type of life insurance that is probably the simplest and easiest to understand. You have a set period of time. A lot of people buy term to cover them for, let's say, 20 years, where you pay the insurance company a premium every year, and you can do that for over the course of however long you set the term for. So let's say 20 years. And if you die at some point during that period of time, the insurance company will pay your beneficiaries an income tax-free death benefit. So very simple to understand. Works kind of like your car insurance or your homeowner's insurance, where you pay the premium for the year, and if what you're insuring happens, in this case your death, the insurance company makes a payout. So this is adequate for most people because most people need life insurance coverage to cover their family, to pay for to replace their income in the event that they died. So they may want to hinge the term to their working life. So let's say they want to have term cover them to if they plan on retiring at age 65 to age 65. So this way their earning years are covered, or they want to hinge it to when they have dependents that are dependent on their income. So they want to carry coverage until their kids turn a certain age, 21, whatever that may be, or they want to hinge it to when their mortgage is paid off. So there's a lot of short term or medium term coverage needs that people have that can be met with term insurance. So the attractive features of term insurance is that it's very easy to understand. You pay the premium, you're covered for that set amount of time. Um, Also, it's very inexpensive in comparison to permanent life insurance. So when you get into the world of permanent life insurance, the premiums are much higher because in that case, you're not dealing with if you're going to die, you're dealing with when. So if you hold a permanent life insurance for life, the insurance company is going to make a payout. It's just a question of when. Whereas with term coverage, fortunately, chances are the life insurance company will never make a payout. One thing to note with term insurance is that it's very easy to view it as a commodity where you could just go with the lowest priced provider of it, where you're covered for, let's say, $1 million for 20 years. Whoever's willing to insure you for the cheapest is who you should go with. So that's not really true. Of course, you want to look at the strength of the insurer. You want to make it sure the insurer is going to be around and for 20 years while you have the policy. Another thing you want to look at is, according to actuaries, from what I understand, the most valuable feature of a term life insurance policy is not the death benefit. It's not the fact that it'll pay you out in the event of death within the term period. It's the conversion option. And so what the conversion option is the ability at some point in the term to convert the policy to a permanent life insurance policy. And there's a few reasons why people would want to do that. So if your health changes during the term and it looks like you're going to need coverage for a longer period of time than you had initially thought, you're going to want to potentially convert that policy into a permanent policy. This way, you could have coverage extended beyond the term. And if your health changed, you may not be able to get coverage, or coverage on reasonable terms unless you use that conversion option, because a new carrier will not insure you and the current carrier will not insure you with a new contract. So you'll want that in case your health changes and you need coverage for a longer period of time. Another reason sometimes people get term insurance is because they have a permanent need. They can't afford to cover the premium for that permanent need. And the term could be a way to basically have that need covered for a period of time and kind of putting off getting the permanent coverage until you could afford to pay for it. Another thing that's useful is that term insurance can be sold sometimes effectively in what's called a life settlement. So let's say you have term insurance and it's convertible towards the end of your term. You develop a very serious health issue. You have a conversion option. Maybe you don't want to have life insurance going forward for whatever reason, but there are investors that sometimes are interested in buying the life insurance policy or the conversion term from you, and that could have some value. So the conversion option has real value to it. Some say more value than the death benefit because you're much more likely statistically to become less healthy in some way rather than pass away. It's important that you look at the term conversion options closely or look at it with an agent because this is not something that's uniform throughout the industry. There's a very wide range of language and contractual language in there with regards to conversion rights. Sometimes the conversion rights um, end early in the term. Some have a limited amount of permanent products that they let you convert into. So it's very important that you look at that closely because it's a very valuable piece and it's not uniform. So I think the one lesson for, or a few lessons for term coverage is that A, it's probably the type of life insurance that the majority of people are going to want and need. B, it's relatively simple. You pay the premium for the set amount of time, the policy stays in force. C, it's inexpensive relative to term coverage because frankly, it's less valuable. The odds of you dying during the term are pretty low, thankfully, so it probably never pays out. Whereas permanent coverage, it's really just a matter of when, not a matter of if, so it's more expensive. And then the final thing is that it's not a commodity because of the conversion privileges and the conversion rights, which are very valuable and differ wildly between companies. So it's worth it to look at that rather than just solely shopping based off of price. So that's pretty much what I have to say on term life insurance. So as always, if you have any questions, please feel free to reach out. And if this series and this topic is interesting to you, I recommend you subscribe for future videos. Thanks. Bye.